Good morning. I'm Peter Milios from the Finance News Network. US stocks erased early gains to finish well in the red after much stronger than expected retail sales cast further uncertainty around the likelihood and the timing of rate cuts. Continued concerns around possible Israeli retaliation for Iran's weekend attack also weighted heavily on the markets. Middle East diminished the prospect of interest rate cuts. The Dow Jones closed down 0.65% after being more than 1% higher earlier in the day. The S&P 500 fell 1.2% and the Nasdaq tumbled 1.79%. In US stock news, Salesforce dropped more than 7% on the news the company is in talks to acquire data management firm Informatica. Goldman Sachs shares rallied nearly 3% after beating earnings expectations. Yields popped after data showed retail sales had increased 0.7% in March versus consensus expectations of a 0.3% rise. Investors saw this as yet another indication consumption remains robust despite inflationary pressures and cast further doubt on the timing and size of any Fed rate cuts. 10-year Treasury popped above 4.6%, touching its highest point since mid-November. Also weighing on markets was Iran's weekend attack on Israel. This was the first direct attack on Israel from Iranian territory. Concerns now turn to the potential for Israeli retaliation and the possibility of further escalation and destabilization in the region. In commodities-related news, new restrictions on Russian metals trading have been imposed by both the US and the UK, prohibiting the delivery of new supplies from Russia to the London Metal Exchange and the Chicago Mercantile Exchange. These restrictions specifically target copper, nickel and aluminium produced on or after April 13. Additionally, the US is implementing a ban on Russian imports of all three metals. As a result, these measures are expected to impact prices on the LME and influence traders' willingness to handle Russian metal. Aluminium posted its biggest intraday gain since at least 1987, and nickel and copper prices also rose. Turning to the US sectors, all closed lower for a second straight day. Tech was the worst performer of the lot, closing almost 2% lower. Health recorded the fewest losses. Locally, attention will swing to the health of China's economy at noon when the world's second biggest economy reveals retail sales, industrial production, GDP and unemployment. Rio Tinto's production report could also provide some insight into the health of China's economy. The SPI futures are pointing to a 0.8% fall. Thank you for listening.